Welcome back to Alpha Recap. Thanks for joining us. Markets closed mixed today, and we had three things that really grabbed headlines. Nvidia's bump, a big regulatory win in neurotech, and a capital returns signal from an investment firm. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. So what really stands out here is how those three items hit different parts of the market. Price action, regulation, and corporate finance, all in one day.
Exactly. Quick snapshot. Nvidia finished the day up about 1 2/3%, closing around $183 on heavy volume, about 176 million shares. That was the headline mover in tech.
And Soterix Medical won FDA clearance for its SPRY transcranial magnetic stimulation device to treat major depression. That's the kind of binary regulatory catalyst investors watch closely.
Right. And the other thing is Tetragon Financial Group. They declared a 12-cent fourth quarter dividend and said they intended to run a tender offer. That's a clear signal that they were shifting toward returning capital to shareholders.
And the volume behind Nvidia, that was the part that really mattered. Heavy volume usually hinted at institutional participation, which can change how other traders and funds positioned themselves.
I mean, when you step back and look at this, those are three very different catalysts that can each move markets in their own way. One moved sentiment in tech, another opened a path to US commercialization, and the third created an event-driven watch list for investors.
Let's unpack each of them, starting with healthcare. The Soterix clearance was the obvious headline, but there were other healthcare developments that mattered too.
Yeah. The National Association for Healthcare Quality marked 50 years and rolled out expanded offerings aimed at quality, safety, and the financial pressures providers were facing. That's not a stock catalyst in the short term, but those programs could increase demand for consulting and health IT vendors down the road.
And Docery launched Spark for DOOH. That's digital out-of-home point-of-care advertising, targeting a market they pegged at about $1.2 billion. If providers adopted those screens, it could shift ad dollars inside the healthcare ecosystem.
So you had compliance and quality initiatives from the NAHQ, ad tech pushing into clinical settings from Docery, and a device approval from Soterix. All three together created a kind of cross-selling and adoption story for vendor names that serve hospitals and payers.
Exactly, but there were some caveats. With Soterix, clearance was only the first step. The next questions were rollout timing, reimbursement, distribution partners, and when revenue would actually show up in the numbers.
And for investors, those were the things that would move the stock beyond the initial headline. Partnerships and payer coverage. Those were the real catalysts to watch.
Moving to tech and market leadership, Nvidia's move was small but meaningful. Gains in big cap leaders often pulled indexes and sector flows, even when smaller names were lagging.
Yeah, that tracks. Heavy volume, again roughly 176 million shares, suggested sizable institutional participation. Momentum traders were watching for follow-through to turn that daily bump into a trend.
But there was a connected risk. If Nvidia kept outperforming, tech-weighted indices could climb even as smaller semiconductor and AI names lagged. That masked dispersion. And dispersion mattered if you were rotating inside the sector.
Short-term traders would be asking whether volume stayed elevated in the next sessions. For longer-term investors, it was about whether Nvidia's strength signaled durable demand for AI-related capex.
On the financials and credit front, today had some headline-driven noise. Google Trends showed searches for Morgan Stanley surging 800% to 20,000 searches, driven by layoff chatter. That kind of attention spike often preceded rumor-driven flows.
Right. And at the same time, a Form 8K was filed for a Wells Fargo commercial mortgage trust from 2015. That was 2015 C26. The filing didn't include all the exhibits in the summary we saw, so investors with exposure were told to pull the full filing on Edgar.
Search-driven volatility and trustee notices could create pressure on bank stocks and certain credit exposures, especially if uncertainty persisted. Investors were advised to wait for confirmation from company statements or SEC filings.
Short reactions.
Hold on, say that again?
Read the full 8K on Edgar.
Good advice.
Consumer data had a small but interesting signal today. Google Trends showed tax refund searches jumped to 20,000, up about 300%. That kind of consumer attention could presage near-term shifts in spending, and retailers paid attention.
Stocks that tended to be sensitive to those flows included big retailers. Traders might have found more short-term volatility, but long-term investors would want to confirm with sales data before repositioning.
Also a fun little media note. Michelle Anthony launched a new finance radio show that was set to premiere on March 7th. Retail commentary could be another source of noise for stocks.
Turning to ESG and construction tech, a persistent market research forecast projected the net zero energy buildings market to reach about $198 billion by 2033. That was a multi-year theme with implications for renewables, building tech integrators, and contractors.
Big forecasts like that tended to attract institutional capital, but delivery hinged on permitting, incentives, and grid upgrades. Policy and local pilot programs could materially speed up or slow down adoption.
Quick rapid-fire updates before we move to patterns. Tetragon declared a 12-cent Q4 dividend and signaled a tender offer. Docery launched Spark for DOOH, targeting about $1.2 billion of point-of-care advertising. And Soterix got FDA clearance for Spry TMS for major depression.
Also, Nvidia was up about 1 2/3% on heavy volume. Google Trends had big spikes for tax refund and Morgan Stanley layoff searches. And a Wells Fargo CMBS Trust 2015 filing was posted. Check Edgar if you had exposure.
Patterns we were watching. First, healthcare convergence. Quality standards, point-of-care messaging, and device approvals were all moving at once. That could create cross-selling opportunities for vendors and faster adoption pathways for therapies.
Second, search-driven volatility seemed to be re-emerging as a practical market signal. Two topics hit similar search levels today, but the big caveat was that sustained search momentum mattered more than a single-day spike.
Third, ESG and infrastructure money was steering toward building-level decarbonization. Investors were following the value chain, from utilities and solar suppliers to building tech companies.
And fourth, capital return focus was back for alternative managers. Tetragon's dividend and tender offer intent reminded investors that return of capital announcements could be actionable catalysts.
So what should listeners watch next? For Nvidia, look for follow-through volume to see if the daily bump became a sustained trend. For Tetragon, any filings that outline the tender offer price, size, and timeline would define the trade.
For Soterix, we wanted company updates on commercialization plans, reimbursement pathways, and distribution partners. Those were the items that would translate clearance into revenue. And for Morgan Stanley, any official statement or SEC filing was the thing to watch to confirm or deny the layoff narrative fueling search interest.
Also watch the Wells Fargo CMBS exhibits on Edgar for any servicer notices or trustee actions that could change distribution timing for holders of that trust.
Final takeaways. 1. Markets close with tech leading, and Nvidia's heavy volume was the headline. 2. Soterix's FDA clearance opened the door to US commercialization, but reimbursement and distribution would be the real arbiter of value. 3. Tetragon's dividend plus tender offer intent made it an event-driven situation to monitor closely.
For traders, respect search-driven volatility and headline risk. For longer-term investors, map these developments to earnings and adoption timelines. Contracts, reimbursement, and tender offer terms were the things that would matter most.
If you want to dig deeper into any of these stories, head to stockalpha.ai and ask us your questions. We'll answer live via the Q&A feature. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next market close with another recap. See you then.